like zero 0.5 within the last 10, 15 minutes. Now it's 0.3. So here's a look at futures short term. 15-minute time frame running to some intraday resistance. We did have PCE numbers come in pretty much exactly as expected. So a little pop up and then a fade. Look, I'm still of the thoughts of the way that 21 period, 50 period line up, the way that this market is kind of throwing out, negative headlines like government shutdown, blah, 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 whatever. It's, I mean, it looks like any type of rally is looking to be sold at this time. We're obviously going to see some price action this morning that I'm going to be watching closely. I'd still like to fade as high as possible. The VIX is elevated. We had highs around 17.74, nothing above 19, nothing above 20. So I'd say like respectable VIX, nothing scary. But are we going to see the VIX, stay elevated in the 16, 17 handle? Do we see this thing smash back down into the 15s or sub 15s? Time will tell. But for today, biggest gamma level sitting around 6,600. My positive negative gamma that stayed. So we've had negative gamma for 2 straight days. This morning's price action is probably sitting right around that same like 6,600, 6,615. Futures is up about 0.27%. So we're going to see a slight gap higher on the SPY and the SPX. Let's crunch some numbers this morning. Yesterday, this was the look from the previous day's close. We had a really volatile day yesterday. We were down, I think from the open, prices were down about 0.92% from the open. So we had Wednesday's close, Thursday's open down about 0.92%. So let's just put this in perspective. I mean, this is down 0.92. Okay. And then this rally back up intraday goes up about 0.6%. We come down to make fresh lows on the day by dropping another 0.7%, which puts us down over 1% or so for the day. That was down about exactly 1%. And we came right back up to finish. The day for the open to close was pretty much nothing. I had an afternoon apology to my double up members because I was looking at a trade yesterday, the 6,600, and I wanted to do an iron butterfly at 6,600 and try to pin like a 10 wide. And that would have been freaking perfect because that was like, I think if I did 10 wide, it was like an 880 trade that would offer about $500 a profit. If I did a 15 wide, it was offering like 1250 a credit, and that would have traded for almost $900 a profit. So I did balk on that trade yesterday, and it was mostly just being like just out of my seat for a second and thought, well, if I'm going to put in a 6,600, I was going to surround it 3 ways. And I thought that's a little bit overkill. If I put in a pin here at 66 and then maybe a pin here for the gap fill and maybe a pin at the lows, right? This would be loser, loser, and then a winner. I still could have won the day, but it's just unnecessary to, take that many trades, even though it still was a net winner. That's why I passed, because I was like, I can't just comfortably say that 66 is going to be the number because that gamma level yesterday was not that sticky. So anyway, today's a new day. Let's put it on the close. This is my daily profit play indicator. The close yesterday around 66.04. So let's do a manual at 66.04. That'll be a reference point from yesterday's close. Now we can see the shift in the 5-period ATR level. So the 50, 100, 150. VIX box highs around 66.73, lows around 65.34. I'll crunch the numbers manually with the VIX sitting around 16.54, which is still going to put us up just around 1%. Am I sharing my screen, by the way? I am, right? Yeah. Just want to make sure. Screen share is up and running. Chat's open for everybody. And I'll post all my comments here. So happy Friday to everybody. Good morning, Andy, Edward, Greg, Gina, Peter, Sam. Good morning, good morning, good morning. And let's go with the 16.54 VIX. So about a 1.03% move. 1.03, 66.70. Oops. 66.70. So 70 to 66.75. Potential top. And 1.03 around 65.40 to 35. 65.40 to 35. Okay, so potential top and bottom, pretty sticky level around 66. Futures market hanging out a little bit positive on the morning. We'll see if there's a slight gap higher. I would like to fade if possible. If the premium is high enough, my IVX that I had on Tasty, there we go. So we're getting like an 18-1 IV rank. This is good. This is like a misprint yesterday. It showed like, 2 or 3, which I think was a misprint. Now it's 18. That's a pretty good blend. Today's market maker move, looking at about a plus or minus 35. We've been seeing a lot of low 20s, 22, 20 on the nose, 24. Now we got a plus or minus 35. So that's not bad, which means I could possibly set my sights on a, bear call spread reasonably higher. I mean, if we gap higher, I could see price action. We gap higher. Maybe we come back and fill this gap. Maybe. But there's some decent structure in here. There is a trend line that could also be acting as resistance. And this would be immediate resistance. If we come up to maybe poke this trend line, maybe poke this high, and then stay here, that might force the bulls or bears to make a decision next week, right? So if I can sell high enough, we come into Monday, Tuesday, is the market going to try to finish the quarter on a high note, or is it going to give it back and revisit that? I keep saying that 6,500 pin level. Coming down to poke, it didn't hit FOMC lows, close, but not quite. Right, this was a 50 low, and these are low yesterday's around 70 something. So we had a 65.50 low during FOMC, and then we had a low yesterday around 69. So I'm going to try to, with a gap higher, I'm going to try to sell as high as I can. Maybe grab on a 5 wide spread $1. Good win yesterday on that 65.50 by 45. I literally had the rest of the day not even fill. So I did like a 45 by 40, didn't fill. I put up here a 35 by 40, 45, didn't fill. So all of my surrounding credit spreads for the day never filled, which is fine. We still had some broke wing butterflies closing for profit. We had the bull put spread for profit. That was fine. Okay. Deanna, do you see that for the trading pub events? So this link is the same, but let's make sure that we at least have, especially in my Telegram channel, we have the messaging correct. So this is a link. So I'm not sure who's posting those alerts, but let's make sure the link gets everyone into Daily Profit Play. Live. Good. Okay. The link in your Telegram. Oh, I got you. The events Telegram. Got it. Okay. So top and bottom, potentially. VIX box, about the same, right? Based on yesterday's close. So looking at ATR levels, if we open up around that 50, 2 ways I can look at today's price action. We can get to the 50%. I can look to fade that. We can get to the 100%. I can look to fade that. I do have a masterclass today on Daily Profit Play. So if you'd like to join me this afternoon, all Daily Profit Play members, 1 p.m. Eastern time, we're doing a masterclass. We had a great 2-day workshop this week on waterfall income. I had a lot of new traders coming into the session yesterday. It was a lot to unpack with strategy 2, but thorough explanations. There's a strategy 1, strategy 2, and all the trades are looking really good. We actually took a live trade yesterday in session, and have a couple pending orders as well that I'll be watching. Let's see here. I've still got a lot of prices to prepare for pinch point. I'm trying to find a couple more trades. We had 58 trades on the Go scanner this week for my pinch point, so still looking good. I priced out like 20 of them already, and it was that little at a glance of I'm not getting the setups to give me at least 100% return on risk. I want the setup to give me at least 100% return on risk, and then it's easy to go after a 30, 40, 50% winner. And sometimes the option strikes are not as precise as I want them to be. So when it comes down to finding the trade or taking the trade, finding the trade's easy. Give me a setup on pinch point scanner. Finding the trade's easy. But because I'm a little bit more particular on how I trade my options, that's where it's the filtering process that I offer these alerts. Crash insurance. Yeah, I mean, it's like the sacrifice of watching the portfolio go higher to make sure that nothing crazy happens. I do know some of the hedges that we have in this class out to the end of the year, out to April, out to June of next year. They are, I think the minimum hedge is like 16-1. I think the best hedge that I have is like 44-1. So I like that kind of 15, 20-1 where, I can risk $500 and potentially make 5, $1,000, $10,000. Like those are realistic hedges. So if I do need it, it helps offset any decent drawdown. Um, talking shop about where the markets are at right now, I still don't think that this market is going to just bottom and rip back to all-time highs. If it does, I think we come right back into the same high at 67, and it's difficult to go much higher than that. I think that we're entering into a high bar count that I've been highlighting for a while now, and now this bar count is over 100 bars, which historically speaking is like up there with like top three, top four all-time stretches away from points, and also stretching away from percentages from our 50-day moving average. So going back to that April and May breakout, all the way back here, we've been above the 50-day since May 1st. Okay. So from right here, the last time we broke above it and the last time we tested it, we're talking about a 97 bar breakout. That when we first got above it, that's now put us up like 101 bars, I think. Yeah. So we're like between 97 and 101 bars. The historical records 102, 105, 112, and 128. So I mentioned this yesterday in my afternoon session. Is it possible that the market finds the 21 period? We go down, we go right back up to the highs, we go down again, back to the highs. We have this be our kind of resistance and support zone. And then if we break highs, okay, that's fine as long as we stay higher. But if we break highs and then come back down and sweep lows, that to me is a topping pattern that's going to end up correcting. So either this market is going to, range around for a while, or I mean, this is just kind of me asking a favor, asking for a friend. But if the market is willing just to keep sliding a little bit lower, offer that seasonal correction, give us something to position for, let the market have, this little weakness window, and then pick itself up, get us into a decent rally into Q4, get back to highs, maybe all-time highs. Market finishes double digits for the year. That's a great stretch over a 3-year run. S&P 20+%, 2023, 2024, and a 10+ year, 10+% year in 2025. I would expect that there'd be lackluster performance moving forward. I did listen to an interesting session yesterday with Vanguard, and their guidance is pretty depressing. They're saying like, well, the average return at these valuations, and again, that's history. It's not necessarily the truth or the crystal ball, but history shows that at these valuations for the overall stock market breadth is weakening, and we're kind of rolling over here at the top. That usually the returns are not great. There can be returns of anywhere between -5% to +5%. That's not 10, 15, 20%. So they're trying to show that the amount of risk that it would take to generate 3 to 5% staying in equities, as opposed to parking money in bonds, but a 3 to 4% yield in bonds with hopefully, little to no risk. I say that I just don't like it. I don't like the play of just putting money in bonds. If you wanted to put money with no risk, go find a big bank and park money there for 3 to 4%. It's illiquid for 12 months. Put in a money market, put in a certificate deposit. It's not investing. It's just put money into a high yield savings. You don't touch it for 12 months and it's going to pay you 3 to 4%, but you're essentially taking zero risk, obviously, unless the bank goes insolvent. So, using a JP Morgan, using a Goldman Sachs, using a huge bank like that, even a Bank of America, Wells Fargo, those are fine. But that's not participating in the markets. And honestly, that's for the trader that's like, well, I'm just going to avoid any exposure in all risk, which is not a trader. I know that to make 10, 15, 20% a year, there is some risk required. But the nice part is there's ways we can craft our trades where, risk should be somewhat minimized, should be defined. Every trade I take, if I'm risking less than 1%, I can max my exposure out where I don't have crazy downside risks. Right. All right. So anyway, we are just around that 21 period moving average off of a 3-day sell-off. They're trying to highlight here, one of the worst days we've seen in 2025. It's like, that's not true, because we did have a pretty nasty February to April. But this is the first time since basically the pivot in April 9th moving forward that, we had a 2-day sell-off here. We haven't had 3 consecutive sell-off days in a while, right? This was a little topper here for, lower lows for about 3 or 4 days. And we had that nasty July 31st to August 1st correction, but the market has set up this kind of rising wedge look. So I still think the structure is something we have to watch. watching this low, kind of connecting the dots here. Okay. And then connecting what I thought was going to be a rising wedge. I mean, this is why I'm watching. This is why the FOMC candle to me is so important. If we take out the FOMC candle, there's room to fall to that 50 period. If we're on the right-hand side of the trend line, a lower high, lower low, I could see some really fantastic levels of support coming in between like 6,300 and 6,100. So if you're, salivating at some dips like I am, if I'm wanting to position on double ups and waterfall income, some of my strategies that would be trying to get in some good action here on these pullbacks, that's the level 63, 62, 6,100. I would possibly take a stab at that 50-day, but I think we can pull back more. I kind of hope that we can. So we'll see. Meanwhile, all the broke wings that I have that are still running, the 6,700 plus, the 6,800 plus, those are all looking pretty good. Over this weekend, it's going to be interesting to see where those are at because, next week, we are going to have the end of the month, end of the quarter on Tuesday is September 30th, final day of trading for September. And we're going to kick off with the non-farm payroll. I wonder if we go to next week. So today's CPI, it's like, or PCE rather, it was exactly as forecasted. So this is kind of why I hate the news sometimes. It's like, oh, exactly as you expected. The PCE month over month, previous 0.2 came in 0.3 as forecasted. The year over year PCE 2.6 was previous, forecasted 2.7, came in 2.7. And the core PCE was previous 2.9, came in 2.9, forecasted 2.9. Wow, they got it spot on. I mean, I think that's just, let's not surprise the market. We did it already with CPI. We've had some pretty terrible jobs numbers. Let me see if there's a forecast for the third on non-farm payroll. I'm curious if there's it shows, oh, look at that. Is that right? Are we forecasting 39,000 jobs for non-farm next week? I mean, either they're setting the bar super low to try to surprise the upside, or we are literally going to be in this like no hire labor market where nobody's getting fired necessarily, other than maybe some tech layoffs, but hiring is hard to come by. So let's go next week calendar. Go out to Friday the 3rd, and I've got a non-farm here showing 50K. So previous 22 forecasted for 50. Bloomberg showing 39. So maybe this will change to kind of match up and sync, but we'll see. Unemployment rate forecast to stay the same at 4.3. So yeah, that's kicking off Q4. And again, the pretty big weakness window is like mid-August to mid-October. Usually September kind of takes the weakness window. That's why it's called the September effect. But it hasn't been a weak September. If the market wants to try to finish the quarter strong, wants to try to get back to these highs, then a run back up to, I mean, it'd be a run of 1.5% from yesterday's close. We know the market can do that, So, I mean, getting back to 67 isn't unreasonable. But like I said, I kind of hope that the market just kind of rolls over a little bit. I'm not sure what the timeline is on a government shutdown. Let's find out, actually. When we know if the government is shutting down or avoiding a shutdown. Because more than likely there will be more layoffs coming. Okay, so currently the government funding expires at midnight on September 30th. Potential shutdown could begin October 1st if they don't reach an agreement. So does that mean the Congress is going to be working through the weekend? They get to pat themselves on the back to say, look what we did. We avoided a shutdown. Or is it just, who knows, man? This is the stuff that like I just don't care about. I mean, we've had shutdowns, we've had furloughs. It's not a debt ceiling debate. Usually the debt ceiling always comes to the 11th hour and they always raise it. I think they punted out so far. I don't even know when the debt ceiling is coming up next. Probably not on Trump's watch because it's like, we're going to spend like we've got an 8% deficit. So anyway. Okay, so what are we looking at today? We've got 7 minutes for the open. I will be watching my key levels here. Futures market is just up about 0.29, 0.3%. That should put us up to around, let me check the SPY here. SPY looking to gap around 0.3%. Okay, so a 0.3% gap on SPX. Hopefully we can sell nice and high. 0.3 puts us to around 66.24. I mean, I'd like to do like a maybe 50.55 or 55.60. Couple levels to watch would be if we're opening up here, there is a gap fill area right around this high. That'd be around 66.40. Obviously, we can come back and fill today's gap. We have a pretty big gamma level at 6,600, and we have the lows this week around 65.69. FOMC low still around 65.50. Gamma pin by Tuesday next week is 6,500. So if the market is going to go, up a little bit, I'd still like to focus on selling high for today's 0 DTE. If we get back to the sticky positive negative gamma point, or we come back down to the larger level, then I'd still be looking to kind of fade today's move, but not aggressively, right? Like I'm not going to step in and just assume like the market's going down. Look, the market could finally we had sell off on Tuesday, sell off on Wednesday, sell off on Thursday after that Monday setup. And by the way, like what a silly little price manipulation we experienced on Monday to have such a big Monday and have the market roll over hard. Right. I mean, Monday was testing my patience in a big way because number one, it did something Mondays rarely do. And number two, it just set us up for a huge tumble for the week. And, are we going to finish the week with the trend of Tuesday, Wednesday, Thursday down? Is Friday going to be like a nothing day where it just kind of stays here? If I can sell high with a good fill, as long as I can get prices above 66.50, I'm kind of happy to take that trade. So that's what I'm looking at this morning, is trying to fade this thing in the 40 to 50 zone. Maybe higher. I've got potential tops around 70, 75 if we get there based on the VIX. But I would think if the VIX goes up, if VIX goes back up, then we're probably going to see prices pushing back down. So I will kind of assess. But don't assume, right? This market with the lows yesterday and a gap higher, we could fill this gap here. We can come back to past levels of support. As long as I'm selling above like 50 to 60 to 70, if I'm selling in those areas with my bear calls, I'm going to be pretty happy with that trade. Okay. Because we have a plus or minus 35 on the day, if I can get a dead zone, of 15 or 20 and get $5.90 to $6, I might consider that trade for today too. That's an inverse iron condor. With the masterclass this afternoon for daily profit play, my 1 p.m. masterclass, we'll talk more about the strategies that I unpack in this class. So that would be a, iron condor, reverse iron condor, broke wing butterfly, credit spreads, all kind of unpacked in that masterclass today at 1 p.m. Okay. If you are in waterfall income or would like to be in waterfall income, we just ran a 2-day workshop this week on strategy 1, strategy 2. Those recordings are posted inside the classroom. I also shared a bunch of notes that would be right here. So let me go into my notepad. So waterfall income, these are all the notes that we discussed this week. So some examples, took some live trades, deconstructed a trade, strategy 1, strategy 2. Okay, and then our class routine, we always step in and trade together on Mondays at 11:30 a.m. for waterfall income. Okay, all right, 4 minutes for the open. Let's see here. I was reading some Fed speak today. There was some, I don't know what they're doing. There's just a bunch of comments from the Fed. So this week, are they actually on the calendar for today? Barkin speaks. Yeah, I saw a couple of highlights. 10 a.m. We've got U of M sentiment. Let me take a look. I think I looked at AAII this week, and then the NAIM. These acronyms drive me crazy. This is the sentiment for the week. The bears have retreated again to 39.2. The bulls have stayed the same at 41.7. The neutral camp has rallied a little bit. We're at 19.1 neutral, 39.2 bearish, 41.7 bullish. Again, sentiment switching into favoring the bulls at the highs. That's why I was a bit contrarian, looking at like, okay, finally they got some people off the fence. And the market's getting more bullish at all-time highs after a near 40% rally. I think it was time to pause a little bit, which so far for the week has been the right play. NAIM, sorry. This is barely budged. So when I look at this one, as far as timing some type of near-term top, I like to see this number around 100. And we're not even close. We're at 86.24. So if this is up to 100, that usually coincides with a bit of a dip. You can see that with just overlaying these two charts. So if we go here, for example, Once we had a couple of tops, drag this straight down, coincided with a nice little top in the market. Once we had this level, coincided with a little top in the market. Once we hit this level, coincided with the top in the market, right? I mean, the market still makes all-time highs, but I mean, even though we had that big sell-off in 2025, it wasn't quite at 100. But what's been crazy is like this one barely budged. This one barely budged. So it's not foolproof. But generally speaking, if this number is over 100 or high like 98, 99, we might have a bit of a pullback in the actual markets. So a couple things to reference. Okay, all right, 1 minute before the open. Let's get some levels. Futures market still around point. This is fading pretty hard. This is up like 0.45% this morning. Now it's 0.2. Here is a quick look at futures on the 15-minute time frame. Kind of came right back up into that PCE news, and it's fading that candle pretty aggressively. So we might, we might not sustain any type of rally. This is going to be like a minor gap higher then, probably like a 0.2% gap. So how high can I sell today? And maybe I just set a trade out there and wait. Maybe I look at my ATR levels, set a 50 to 100%. I actually would really like the 100% ATR. If we can do like a 100% ATR, get filled for $1, I think that's a good bear call spread for today. If we gap a little bit higher, trying to sell anything above like 66.40, 66.50 would be pretty nice. So let's have a look here. Market is open. So let's flip this over. Okay. That's my call. That's my bull call spread. Okay. That's so I rolled the bear call spread out. This is my bull call spread. If we stay above 40 today, that's actually a $500 bonus trap. We'll see if we get that. And then some of my broken wings. This one set at a 10-cent debit. Waterfalls looking good. All right. Let's go into the option chain for today. So can I get on the call side a 50 by 55? I think this looks pretty good for $1 or so. I'm going to try to get this one in for $1. 66.50 by 55 for $1 pending order. I know the market might be able to hit it, but that's going to be a 100% ATR. And I'm hoping that it's not able to get there. Plus or minus on the day is like 35. That would give us a run. That'd be up 33, 34 points. Let's see. Okay, biggest gamma level is still around 66. So if we hit the 50% reject, yeah, I think like the 50 to 55 zone looks pretty good. I'm going to take a 50 by 55 for $1. So pending order, that's a 66.50 sell and a 66.55 buy for a 5 wide spread trying to collect $1. And then I will go 60 by 65 for another $1. Okay, just got filled for $1 at the 50 by 55. So trade is in. I'll post this for members. Daily profit play. SPX today is the 26th. Selling the 66.55. It's the 50. So 50 call. $1 credit. And I'm putting in another order. 926 expiration. Sell the 66.60. Okay, so filled at $1. And the next trade is trading for about 90 cents. Oh my gosh. Look at that freaking rip. Okay, well, that makes things a little bit more interesting. Right out of the gates, this market's like, let's go. Wow. Okay, well, let's back off on that second trade for a second. That is up to, I'm going to cancel that second order for just a moment. Let me get my bearings here because that's a big fat rip right out of the start. I guess my next trade, I'm going to look for maybe like this 65 by 70 and try to sell this VIX. I mean, VIX is retreating. I'm getting the levels to climb. I mean, now the gamma levels are climbing to 50. So can we get like a gap fill? Let me see what a gap fill looks like. So I go a 10 by 5, believing there's some bullish capabilities today. 10, that's a little, yeah. Wow, that is a big rip. Um, Fudge, man. 50 and 55. I'm gonna watch that one closely. I'll probably have to play some defense if we obviously breach it. Looking at maybe the 65 and 70. I'm gonna look for a buck on this one. And 75 by 80. Get those in for $1. Okay. So I'm gonna edit this one. This is gonna be a 65. $66, 75, 66, 80. Okay, so two updated pending orders, and the first trade this morning is the 50 by 55. So selling at the higher gamma level. That 50 zone is just under the 100% ATR. I'm hoping that all this really is technically is a gap fill, and the market, maybe stalls, but I don't know, man. This market seems that's a really big jump right out of the gates. No, it's a bear call spread, Jack. So what I'd like to see on the trade that I just took is if price can go back down and eat into this candle, then we'll turn that little bear call spread into a profit. So let's see if we have just a quick jump and it starts to fade this candle. If that's the case, I'm just going to set a chart alarm. We set a chart alarm down here. See if we chew into today's candle a little bit. See if we can take out that open. Okay, so let me get this ready to go. So pending orders are in Telegram. And I'll update the tracker here in a little bit. Inflation data calms rate cut jitters. I don't even know what rate cut jitters are. Like, we know the Fed's cutting. Have they changed anything? They're going to cut in October. They're probably going to cut in December. Anyway, whatever. Now the market can say it cuts the losing streak. I mean, if you want to go higher, that's fine. I mean, I base it on the 100% ATR. I mean, it's now trading for a slightly higher delta. I mean, now we're trading like a 30 delta, which is pretty high. So moving it to like this 65.70, that's now a 15 delta. The 75.80, that's an 11 delta. I like those a little bit better. So if you didn't get in on the 50.55, probably holding off, and that's a good thing. It could still finish below that for the day, but still, If you want the kind of safer trade, letting price have some room, like the 65 or 70 zone starting your bear call, I think is a little bit better. The day is just beginning. There's still plenty of time left, but I'm going to try to look out as far as I can. So if I went 6,600, I mean, if we don't come back and fill today's gap, I mean, we have to have like a nasty close in the day. I can still get, this is a 19 delta. If I go 10 wide here, it's like I can go 95 by 85, get a $1.20 for this one. That way, if we just stay where we are, that's a 16 delta. Can I get $1 for this? See if I can get $1. All right. I don't want to take a ton of risk here, but going to the 90. So 95 by 85 gets us through the gap today. Yeah, hold those bear call spreads in place. I mean, the 65 by 70 is trading for 80 cents right now. I'm taking the trade with a pending at $1, so it's not filled yet. And then I'm looking at the bull put side right now to see if I can go, if I'm comfortable going 10 wide. That's a bit more risk in case we roll over, but we might just have, Friday hold with some green. The trades are in Telegram, David, for my daily profit play. Just trying to think if I should go 95. All right, plus minus 35 on the day. Let me just check this plus minus for a second. So from here, 35 points. We've already hit from the open, from yesterday's close, we've already hit like the market maker move on the day. If we do it from the open, we opened a little bit higher. That plus or minus, 37 is like the high. So, if we kind of stick with the market maker move on a Friday, it's a big jump out, but hopefully we don't go anywhere. Let's see if the 50 can hold. So let me just get this organized. I'm going to spot check this one. Today, the 50 by 55. Okay. And then this is a trade that we took yesterday for waterfall. Strategy 2. So today, the 50 by 55 for $1. It's down a little bit. Line in the sand is 50 cent or 66.50. Okay, Bill, you're into $1.50. That's good, man. That is good. They may not cut. Well, that shouldn't necessarily bode well for stocks. A not cut is probably worse for stocks than it is good. And honestly, like I told you the stat. 3 months out, 6 months out, 1 year out, 3 years out, 5 years out, whether you have a hike cycle or a cut cycle, there is a slight outperformance when the market's seeing hikes by the Fed. But over 3 to 5 years, it's like there's a 2 to 3% difference, and they're both positive. So I don't think the market really cares. It's noise in the beginning, but usually things go higher. Okay. Okay, so this will be interesting. So my broken wing butterfly, this might be my bull call spread. That if we're over 66.40 today, that could be a $5 winner. So there's potentially on. I just got filled with a 65 by 70, so that's filled. Good Lord, man. Is this like comeback kid market today? Look at this freaking price action, man. Gap higher. This market is on a freaking mission. This is a lot of price action in 15 minutes. So my 65 by 70 just got filled. I'll edit this in Telegram. 65 by 70 is now filled. 100% ATR is at 57. This 100% ATR is at 57. So I mean, out of the gates, 05, we're already up 35 points from yesterday's open. We're already up about 25 points from today's price action. Plus or minus on the day is 35. Now it's less because we already had opening bell. So plus or minus at 25 points. I mean, we really shouldn't be going higher than like 50 or 60 or 70 today. So I don't know. I mean, that's an interesting way to start out a Friday, but hopefully it's up and fading down. Let's see what we get. 65. So here, it's another. Oops. So that's BC for bear call. So bear call for $1, bear call for $1. There's half of my broken wing for a bull call. But more importantly to me is the risk is on the broken wing butterfly is the 40 by 55. And that's where I want to see price into October 3rd, October 10th. I want to see price below 66.40. Okay. So we'll let the rest of this kind of unfold for the morning. If it's just a quick jump out and then the market stays here for the morning, that should be fine as long as we don't keep creeping higher for the day. I obviously don't want to see prices going higher, staying higher, and closing higher for the day. I'd like to see price do exactly what it's doing right now, which is we go up, we stall, we come back down, and our trades are looking good for profit. Okay. Jeff, I posted the alerts in the members Telegram. If you're a daily Profitly member, they're in Telegram. Okay, let me take a look at let's see here. So I have a little bit, well, let me just go to a fresh account here. Let's look at the 30 by 35, 45 by 40. I mean, if this trade was offering me like 580, 590, I'd be more willing to take it. I could probably get that if I go slightly higher. I think I'm going to go slightly lower on the call side. I mean, now it's 20 wide. If I can get $6, that's not a bad trade. We have to be below 66.25 or above 45. So below 25 would be basically if we came back to retest the candle or close this gap today to the upside. I mean, we need it just to be above 45, which if we're making just a wild and crazy run today, it could certainly do that. So let me see here. Can I get, that's only 560. Jeez, man. 20 wide for 580. Like I'll put in, see if I can get filled for like $6 on this trade. That mid price is showing at 560, 570. I'm not going to take the trade for less than $6, especially going 20 wide. Okay. The fact that it's just sitting there, I'm just going to cancel it. Let's get some context here. So we are breaking this near-term trend line. There's some pretty good support right in here. Support resistance, which is around 6,700 on futures. Take this into SPX. Same thing here. This way you get a full feed. So right there would be some resistance coming up sooner than later. But again, like pretty decisive price action right out of the gates. but I need price to stay. So my line in the sand is 50 and 65. Yep. So 65 and 50 are my lines in the sand. The 75 by 80 is trading for 50 cents. I'll hang into that one a little bit. I might go slightly more contracts. If I get like the 65, 70 looking better, I might take another contract or two to hopefully mitigate the 50 by 55 in case I'm wrong. But obviously I'm not wanting price to just go straight up and stay straight up for the day. Okay, so taking a look at this, you know, update wise, there's not really on the gamma flows, there's not really much above 50. So I'm hoping this actually does act as resistance. Previous support could be a resistance zone. I get it with the VIX top today, 70 by 75 based on the VIX, which has been retreating pretty hard from 16. We calculate around like 16.3. VIX is going down. But that's just a very aggressive jump. I mean, the market's already up 25, 26 points, 27 points, like immediately within the first 20 minutes of the open. And that's not the norm. The market is not right out of the gates at the open, just like rip 20, 30 points. Usually it's choppy, messy, centered, noisy, right? But very decisive this morning. I mean, you can look at it, David, again, it's like, where is your dead zone? That's all I'm after. It's like if the market is up here and it stays higher or goes lower, I mean, I just want to make sure the market's not going to do something like this, go up and then pause for the entire day. So if I look at it, I'm probably already, a little bit too saturated on one account. So I don't want to have to overlap the, reverse iron condor. I'd probably take it on a fresh account here. If I did 35 by 40, 55 by 50, like, is that right? 35 40. I mean, again, like, it's not offering the type of credit that I want. 565, I'm not that excited about that credit. $6, maybe. Like 605. I don't mind taking this trade at 605. That's a 20-point dead zone. 35 is where? 35 is back below here. 55 would be this thing's rip into, 100% ATRs and going higher for the day. Let me try it. See if I can get filled for like 6. Let me try like a 610. I'll penny this thing down to $6 and see if it fills. So 610 not filling, 605. I'm willing to take $6, but no less. 605 not filling. $6 final offer. I'll let it sit at $6 and see if it fills. But going 20 wide, I don't want less than $6. That'd be a $1 profit for a $4 risk. I'll see if it fills for 6. I'm not sure what that is, Susan. Were you talking the 65.95? I was doing a bull put spread. I looked at 65.95, but I did not take that trade because I didn't want to go 10 wide. I'm trying to keep the spreads tight. Trying to go no more than 5 wide right now. All right, so a couple lines in the sand. I have the 50 and the 65 right now. So 66.50 and 66.65 there. So I'd like to see price stay below that for the day, if possible. If we come back in and hit this 66.16, kind of fill the open of the day, that would allow us to get profits on both of those pretty easily. So that's where I'm going to hang out for right now. The other one that if it gets filled, that would be for the 75 by 80. That hasn't been filled yet, but I'll put this up here in case I want to look at that visually. So 66.75. So a 50, oops, change colors. So a 66.50 and 65 and 75. If price will close below, this one is filled, this one is filled, this one is pending. But if price can close below 50 on the day, chew into this inefficiency candle, that should help us at least grab some profit today. Okay. That reverse iron condor, David, I'm just going to cancel that one. If it's not filling at $6, I'm not going to sit here and wait all day, because what will happen is eventually the market's had enough time to make a move and then the credit will fill, but it's like less and less likely that I'll get that expected move that I want. So I'm just going to cancel that one. Okay. So I'm sitting in with a couple bear call spreads this morning. And price action wise, like I said, the best thing I could see happen this morning would be that we have this huge thrusted move and the market takes back the opening candle. So if we take this down to a 5-minute chart, like this is a really nice inefficiency candle. So I'm hoping that it just wants to come back in and retest it. Come back in and retest it, maybe chew into the body of the inefficient candle. And if we get back down to like 30, 25, or 20, we should be able to see some profit on our 66.50. What I might end up doing is taking profit. If I can take profit on the 66.50, let's say for 50 cents or less, I will probably keep this one open for $1 and take the full credit on the end of the day. So net, if I can, pull $100+ between the two trades, great. If I can pull 50 cents on the 66.50 and pull the full credit at the 66.65, that's better. That's going to be my plan. Okay. And ATR wise, with my, let's see, we're on the 5-minute chart here. My indicator, this is the 100% ATR based on the previous day's close. That's a 54. It's a 66. It's like, I'm hoping that we have some type of rejection there. But I could certainly see us like leaning up to, like grinding up to that like 50 zone and hopefully not closing there for the day. Give us some balance. Like honestly, it's pretty easy to trade day to day when the market gives us some balance. What is very difficult, especially in a 0-day environment, is the market just does this for the entire day and it closes at the highs. That's a very difficult 0 DT. If the market does this for the day and it closes at the lows, that's a very difficult DTE. But if the market is going to, thrust up here, grind, but then find a recentering, right? Where from this level, plus or minus 35, from this level, plus or minus 25, stay within that range, have a ceiling, have something like some guardrails. Hopefully it matters. So if you're to get into the 66.50 by 55 showing 98 range, which would be that delta. No, your delta is way higher, Bill. If you're in the 66.50 by 55, that delta is going to be like a 30 or 40 delta right now, right? You're trading for like a 30 delta. You have about a 70% chance of profit on the trade. If you want to, kind of stay out of the money, it's like you want to be in like the 20 delta, 15 delta zone. So it's offering more credit. Like, sure, I can get $2 and change, but I'm still risking $3. So if I'm gonna kind of double down on the trade, it's like if I'm gonna take a second contract there, I want it to be for like $4 credit, but I'm still taking on more risk. So what I'd rather do is maybe have a better fill if I did the 65 by 70, and this thing offers me maybe $2 to $3 credit, maybe going a little heavier there. If I get the 75 by 80, I think I'm going to take this one for a couple of contracts. Let me go another 75 by 80. So 75 by 80. Put in another contract there for a buck. Okay. So I'll just play around with like the out of the monies. Because clearly the 50 is, I mean, if you look at my expected move on my option chain here, the 50 is within the acceptable expected range, right? So this plus or minus 22, we could see price getting to 50 or 55, possibly higher, but I'm looking for, it to not go much higher than this. And hopefully by the end of the day, it's going to be below 66.50. So if we test it, that is fine. Like I can't stop price from doing whatever it wants to do. But if we hit I mean, we're clearly filling this gap. Does the market respond to that? So far, it's not. So what's next? Well, I've got a big gamble level here that's all of a sudden gone from a 6,600 to now going up to 6,650 while we're hitting it. So if we're going to hit 50 or we're going to hit this 100% ATR, does the market actually care? Because it's acting like it doesn't right now. So I guess my fun little takeaway for today is like this 35 by 40 is a section of my broken wing butterfly that's worth 500 bucks. So if we're greater than 66.40 today, I get 500 bucks. If we're I mean this is like threading the needle here, but if we're less than 66.50, now the reality is like this one isn't as important because I get the bonus trap there, but I still have a bear call spread that's out to October that I want to see price back below 66.40. Um, but the reality is I'd like price to be less than 6650 by today's close. We're at 66.47. I mean, I can, but it's like again, the butterfly stuff happens all at the end of the day. That's not a pin, that's just the bull call spread. That's the side of the bull call spread. So um the other half of that trade has been rolled out. So I basically separated the trades where I have the wider bear call spread that is out to like October 3rd or October 10th. So I'm not going to cash it out. Okay. And hopefully, again, if the market just doesn't go high, stay high, if it goes high, it rejects, a open for the day. So previous day's close, open here, very aggressive rip. If the market starts here, maybe reaches a high here, but recenters, perfect. It's enough for us to be less than 50, make some money. Less than 65, make some money. It's not unreasonable. I mean, it's not like I'm taking a trade wanting to get threatened in all my positions. I'm not taking a 50 by 55 so I can lose. I'm taking a 50 by 55 because it's above the expected move. It's right around the 100% ATR. That was all posted in Telegram, David. So I look, I didn't want to have to roll the broken wings, but remember that broken wing butterfly, even the couple trades that I had running. So there's a broken wing butterfly for daily profit play that expired today, and the strike price, the pin price was 66.40. Now, if I was in that, it's already been like segmented out. I'll show you right here. So let me find it. So this trade expires on Tuesday. And actually, I rolled out the bear call spread again. So the October 10th bear call spread, I rolled that for waterfall. This broken wing is at 6,700. That's out to next Friday. This broken wings at 67.90. This one should be for the weekend. This one is probably going to get close to filling at 10 cents debit. Um, let's see here. The 55 for the 10th. That's part of a bear call with this things got a little ugly here in these rolls. So this is part of my call condor. I'll show you. Hang on. This is a little messy. So this one. So 30, 40, 55. Nice, Brett. Did it close really? Uh, Tell me you took the trade after the 5 minutes though. I don't think if you took the trade right at the open, there's no way that would be filling. But did you take the trade after 5 minutes? Because that would be perfectly centered. I'm just thinking if you took the trade right at the open, it would have been threatening those call sides right away. But anyway, price is cooperating. This is good. This is what I wanted to see. Roughly 5 minutes. Okay, I mean, if you got in 5 minutes in, that's perfect because yeah, this price has barely done anything, right? 5 minutes in, we're right back where we started. Now that we have retreated a little bit to 36, that should be helping our positions a little bit. So my bear call spread this morning is now only down about $70. My 65 by 70 is up $30. So I'm going to look to see how this kind of settles in. Again, just getting a read on the day. If price starts to chew into this breakout candle, then our 50 should be fine. 66.50 will look better, and 66.65 will be looking great. Even if I get this one for a break even. Okay, a break even trade is totally fine when I've got another trade in for $100. And if I can take that winner, I'll take that winner. Okay, sentiment a little lower than expectation. I mean, that's okay, fine. I mean, this would be great. This is why I also didn't take the 10 wide bull put spread because, if we're going to be selling off, this is some pretty good price manipulation. I mean, I know the market's not always technical like this, especially stocks, but in typically a swing when we go high to low, if the market uses this as a pullback, so we have this is the high, this is the low, the market pulls back here and comes back down for a flat pattern, or this is a high low, this is our fib. There's roughly a 50% pullback, and then the market's going after like a 127. Just some standard fib stuff. So I think ideally would be we see price end up coming back to fill today's open and get back to like 66.15, maybe chew into this gap a little bit. And the nice part is it's not like there's a big bull gap to fill. I mean, there's not. So if this market's going to hold below 6,700, the efficiency is let's fill today's gap, right? Which it's not a gap in futures, but it is a inefficiency in futures. If I look at the futures feed, okay, I mean, look at this thing. Futures is selling off hard right now. This is perfect. So this bear call is now close to break even. Here's what I'm going to do. I'm going to set the bear call spread. I'm going to try to grab a couple bucks out of this thing. So I'm in for $1. If this one gets like 10, 15 bucks positive, I'll take the small winner, and then I'll let that 65 be the winner on the day. I don't need to be stupid here. The 50 clearly was a threat. So right now I pulled it in for $1. Let me set a debit at like, I'll go 95 and just make it a break even. So that 50 by 55, if we get a 95-cent debit or even $1, I'm going to get out of the trade for a break even. And then I'll let the 65 hopefully be a nice winner on the day. And I'll let that one be, 80, 90, 100 bucks. So hopefully this one will show 5 or 10 bucks profit. Yeah, we're getting closer. I mean, if you want to hang on to it longer, you're welcome to. I think actually price is doing what I expected, which is this. What are we doing? We're chewing into this candle. So as long as we keep doing that, our trade's going to look better. Okay. Out with 40 or out at 40. Good, Randy. That's a good fill. So out for 60 cents credit. Nice. So right now, the two trades are offering net profit. I'm going to try to get this the 50 by 55 out for a break even, and the 65 by 70, if I can manage, 60, 70, 80, 90 bucks out of that one, try to manage that for a winner. So again, repeat here. I'll just do a DPP update in the Telegram. So DPP update. It is 10:09 a.m. Eastern time. 6650 by 6655. So entry for $1. This is gonna we got to get close here to break even or better. So entry $1, setting a 95 debit to close for break even, for better than break even, and then the 6665 by 6670 bear call spread filled for $1. I will manage this one for a winner. Hopefully, I'd say 30 debit or lower. Honestly, I don't mind letting that one kind of go a little bit longer for the day and see if I can grab the full $100. Okay, Aggie says in at 150, out at $1. Good. So the 65 by 70 is up about 55 bucks right now. Just going to see if I can get this 51 down to break even. See if futures will continue to sell off a little bit. Just a noisy day. So this, I'll bring up a fib here. This is what I was talking about as far as price action. So we have a high to low swing. Market pulls back, 50 to 61%. It's just a nice run. There's, like I said, there's no real gap to the upside to fill. So, I mean, the inefficiency, this is what's crazy about the futures market. This thing was up during PCE, pulled back, ripped up, pulled back, like just a really volatile session. But the nice part is all right, just got filled for 95 cents in that 50. So we got a break even or better on the first trade, which was threatened like right out of the gate. So I'm actually pretty pleased with that one. And then the other bear call spread, let's manage the profit. It's up 63 bucks. I'm going to try to manage this one for, hopefully 75, 80, $90 profit. Also, it's not a terrible idea just to take the profit. To be fair, it's like we've had a good week. Monday was not awesome, but Monday and closing out 4 broken wings, closing out additional winners for the last couple of days. Overall, it's been a pretty good week. And I'm going to see if I can manage this one. I'll set this one for like let me look at here's the nice thing. Anytime you're wondering, what's the probability of my trade? Look at the option market. Okay. So right now, everyone see this 66, 65 by 70 bear call spread. Right now it's up about $67. Okay. I know that the max profit on this trade is $100. In order for me to get $100, it has to stay below 65 by the end of the day. Okay. So if it stays below 65 by the end of the day, I can look at my option chain and figure out roughly what that probability is. Now, Tasty actually shows me here probability of profit. Right now, it's showing about 89 to 90%. Now, I will show you on an options chain based on the current deltas what that also matches up. This is going to be trading for probably a 10 delta or so. Watch. So I'll go to my option chain. Here's my 65. Can everyone see this is an 8 delta? Right now, this is an 8 delta. There's about a 92% chance that this stays out of the money for the entire day. So right now, I think the probability is on my side. Now, I'm not saying that I want to hold it all the way to 0. That means I got to hold this thing to the end of the day. But what I am saying is the probability of it not getting back above 65 is pretty high. So what I'm going to do is I'm going to see if I can manage this one for I'll go 10 cents. I'm going to set a take profit here at a 10-cent debit. And that way, if it does get hit, I'm taking 90% of the credit. I'm out of the trade. I don't have to sit all day on it. but price is going right back where we started. This is good. Okay. It was not a fun, first 30 minutes of trading, but price did cooperate nicely. This is what I want to see. So now that our 65, now the 100% ATR is at 57, our 65 is the line in the sand. Okay. So I do want to take a quick peek. Is anybody still hanging on to that 50 by 55? Because right now it's trading for about 80 cents. If you want to grab a small profit out of there, you can grab 80 to 85 cents, close it out for 15, 20 cents profit. But the 65 is looking even better. Okay. So now it's up 70 bucks. I'm going to try to get this one. I would say 15 or 10 cents is ideal. Nice, Dave. Dave says 65 by 70, 50 by 55. Good, good, good. Okay. Yeah. So not bad looking to manage some profit. Not bad at all. But I'm setting in, so I'll update this. So this is going to be quick update, DPP update, 10:14 a.m. Eastern time. The 6650 by 55 bear call spread. Entry for $1 credit. Close for 95 debit. Small win. Now trading for about 80 cents debit or a bit more profit. The 6665 by 6670. Entry was $1. Setting a 10-cent debit to close. I'm willing to accept a 15. Really, it's like a 20 debit or less, right? We didn't lose on the 50 by 55. If I get 80 cents out of the dollar, out of the 60, I'm right there. Probability of profit in the day is over 90%. Price action is cooperating really, really nicely. And yeah, volatile day, but right back where we started. So what's funny is even if you did a standard daily profit play right at the open, okay, it was now back to center. So you're getting out on a daily profit play. If you took it, 5 minutes into the open, it came back. Like price can go up and down, we can still get profit. Price can go down and up, we still had profit. Even yesterday, okay, if you trade it at the open, it threatens the put side, comes back up, you're out for profit. If you took it 5 minutes into the open, it goes down, recenters, you're out for profit. If you waited all day, price didn't even go anywhere for the day. So even for some of these crazy volatile days, I'm telling you, like if we let market makers be market makers, we still win most of our trades. Okay. Sean says my 75 by 80 for one is down to 10 cents. Good. You got filled for $1 on that, Sean? How did I not get filled on that trade? You had a 75 by 80. I've got the same trade in, dude. You got filled at $1? Why you got to make me jealous? Anyway. All right, good. Well, take the profit. If I was in for $1 and I'm showing 10 cents, like I'm out taking profit. Okay. All right. Here is the deal. Who's his broker? Yeah. Donna, do you remember when back in the day, Equities on Demand. I was like, I don't remember the name of the trading room. Good old Equities on Demand. Was it Linda? Linda was the trader that I swear had the most. It was a Thinkorswim platform, and I'm like, I still to this day don't think that those fills were accurate. Like something was weird about like there. So anyway, quick backstory. I ran a trading room for a couple of years. We traded a lot of options, and there was one particular student that every time I'd place a trade, this student would have like 10 to 15 cent better fill than I would. And the student would always get out earlier than I would and always have a better profit than I would. I'm like, Linda, I'm happy for you. I don't know how you're doing it. I cannot believe how you're getting these fills. But I've had zero feedback from Linda. I have no idea how she's doing. I'm hoping that, that wasn't fake, but it was so weird. It's like, I see the same broker platform. I trade, every day. It's like, how are you getting everything is a better fill than me? So we'll find out. But anyway, it was just a funny story. It's like, I wasn't mad. It was just like, I cannot believe that I'm getting like literally like 5, 10, 15 cents better fills, better credits. I'm like, Linda would have edged me out by like, you know, thousands and thousands of dollars on all these trades over the course of a couple of years. So anyway, it's all good. Okay, so recap for the day. Price actions cooperating nicely, right? So within that 50 to 100%, totally fine. Mechanically speaking, what do? We used our deltas, we used our ATR levels, we used our market maker moves. This is the plan, and price is cooperating nicely. Now, for the rest of the day, the broker can do whatever it wants, or the market can. I mean, I don't really want the broker or the market to do anything other than maybe just this. If it's noisy for the entire day, that's fine. If I have those future bear calls, those broken butterflies, I'd like to see price maybe fill today's gap and continue to sell off. And maybe we actually close red on the day, which would also be kind of not fun for the overall like 3 to 4 day sell off, but who cares? This needed to happen. So it wouldn't surprise me if today is just a very choppy, volatile day. But as long as we are less than 65, right? Less than 66, 65, then that's a dollar profit. And I'm hoping that's the case. Right. And right now there's about a 90% chance that it stays that way. I will take those house probabilities right now. Okay, nice. Power says 130 out at 50 cents. Awesome. Going to golf now. I'm jealous. The Ryder Cup is on my phone, but it just turned off on me. Okay. All right. So we're not done. Let's recap here. Prices looking good. Bear call spread. If you want to take some profit, your 65 by 70 is up about $70 of the dollar. So if you've got multiple contracts in, you're up 70% of that max credit. Great spot to take some profit. I'm happy that we closed out the original trade just because it was threatened right away. That 95 is now trading for 85. Again, it's not offering like a substantial profit, but better than nothing, right? Certainly since it was threatened up front. Now look at the deltas. Now my 65 by 70 is a 7 delta. There is a 92 to 93% chance this trade is still safe for the entire day. Okay. So I've got this thing set at a 10-cent delta or 10-cent debit. So I'll take 90 cents out of the dollar out of that trade. And then if we see price continue to slide lower, that helps all the broken butterflies look better coming into next week. Larry says the 66.50 and 62.50 now at 150. That's still good, man. Still out for a buck or able to get a buck. That's good. All right. So before we go, I just want to do a quick summary of the week. Today, I do have a couple master classes to sprinkle in. So we had a daily profit play. We had a master class Monday at 1 p.m. We have another one today. So if you'd like to join me for a daily profit play masterclass, if you're in my service or want to be in my service, we've got a masterclass today at 1 p.m. Okay, waterfall income. We had a 2-day masterclass this week. Masterclass Tuesday and Thursday. Recordings and notes available. We also posted a live trade together in class yesterday. That trade is still valid today. The trade from Monday has been discussed, and also you can tweak it, and it's valid today as well. So there's a couple live trades to get in on waterfall income if you're interested in that. That is a index swing trade out into November and December. And then Newsbreak will start getting more active here once we kick into earnings season in October. Next week, Tuesday is the end of the quarter, end of the month. Friday's non-farm payroll, double up alerts. I mean, I do see that 6,600 is back into the mix today. That would have been nice to have. I don't know. I'm going to wait. It's Friday. We've had a good trade. I took a 220% winner this weekend, double ups already. Pinch point. I still need to do some work on the scans, but anyways, got some master classes today. Looking good. I'm going to send a video out for my Project Options Edge. I do want to do a positions recap. Some positions that we're in. I think on one of them, like I've got some naked options in Chipotle for Project Options Edge, and we're underneath our sell put. We haven't been assigned on it yet, but I'm watching. We got a ratio spread on Target that should be fine, but Target's been sliding kind of consistently lower, and we still have some wiggle room. But I mean, it's crazy to see that retailer just continue to sell off compared to like a Walmart. All right. So on that note, one more time, let's discuss. We just tapped the alarm to take out the intraday start. So 6616. And education on the old waterfall income. We've been talking about this stuff all week. We had a good